How do I diversify our accounts so when this bull market explodes, I believe that person means implodes. I take explode to be moving higher like we've seen over the last 6-7 weeks. Um, how do I diversify our accounts so when this bull market implodes, we don't lose everything? And the second one, I am 11 years from drawing from my retirement accounts, TSP, Roth IRAs, 401ks. TSP, for those of you that don't have it, thrift savings plan, federal government plan. This could mean any pensions, any other types of um, retirement plans that your employer might have. So based on the predicted overdue drop in market performance, must be reading my blog, should I maintain my current growth and income profile or head towards a more conservative investment profile as I continue to contribute to these accounts? So that's very loaded questions. First off, I think it depends on your overall financial plan. What's your time horizon? When do you actually need this money? Just because you're retiring in 10 years doesn't mean you're going to be taking it all out 10 years from now. Also, what's your personality? Are you going to be able to live through a possible 50% drop in the stock market that will be accompanied by some negative headlines? If the answer is I don't know or I don't think so, then it probably is time to look at reallocating some of that. During the webinar, we talked about the Buffett indicator. Other valuation indicators are saying the same thing. Of the next 10 years, because you're buying at such a high valuation, your returns are probably going to be quite low. So trying to squeeze out a little bit more is probably not something that I would recommend, because oftentimes what we see is people are not able to react without a well-defined plan and exit strategy that's been tested over time, like what we use. The accounts managed by SEM, we do the diversification for you. We got out of emerging market bonds earlier this summer when it looked like they were a good value. Our systems bought, they started going back down, we got out. So the diversification we had there is now in some short duration bonds. We're in high yields. We take care of all that diversification of not only asset classes, but we're big proponents on getting you into multiple strategies at SEM. We have tactical programs, which are basically daily managed things that are trying to chop off losses as quickly as possible. We have our dynamics that are based on my economic model. And then we have AmeriGuard, which is a beautiful blend of American funds and Vanguard to give you more of that long-term exposure. So we will do that for you. If you're not with SEM, circle back with your financial planner. A lot of times people have some money with SEM and some money elsewhere. So we just recommend that you do that.